Alright, we're now started our YouTube live. We're going to wait a few more moments just so people are going to be hopping in. Also, I'm not going to be doing the TikTok. Did not charge my phone last night, so unfortunately we don't have that going, but that's okay. We got most of the people on our Discord notified, so we will wait a few more moments and then we're going to jump right into the video. BTC not looking too bad, made a new high, looking like it's retesting the previous low there with a nice wick rejection. 2 minutes on the 15-minute as well, about a little over 45 on the 1 hour, so definitely a little bit of time before we see a nice candle closure, but it's a pretty favorable spot right now for the buyers, in my personal opinion. Let's just jump back to the 15. I think if this does hold, we're going to see some more upward movement here for the price, but that's a big question of if we're going to hold or not. Still got 2 more minutes, so we'll see where it goes. Going to be looking over our normal routine, S&P, equities, all that stuff, global equities, currencies, and then we're going to finish off with some nice metals and oil, so commodities to end it off. Yeah, Nasdaq is holding, made a higher low. VIX is still contracting. I think it'll be a pretty good video. Not much movement though. DAX is getting weaker, which isn't great. Vanguard World Index is consolidating, not really able to make any sort of higher high. But we will see how that looks in different time frames. I'm just setting it all up so I have a very easy to view series of charts here while we're going through it. Gold and silver, we'll talk about those on a larger time frame. And then crude oil is just consolidating, not doing a whole lot. Just want to make sure that the video is public. Yes. Alright, I think we should be good to go here. Yeah, not really liking that too much right now. Not enough for anything worth doing, in my opinion. Alright, so let's get the economic data out, because we're going to talk about that at the start of the video, just talking about the Fed interest rates that are going to be appearing here in really 47 minutes. Could very well impact the US dollar as well as some of the US indexes, so we'll keep an eye on that. Forecasted to be 25 basis points, same as the previous, so you know, if they're going to try to create more stimulus, easy money, they're going to lower interest rates, and if they think that there's worry of inflation or they want to create a little bit of deflation, don't know why they would, but then there would be a larger number here, which wouldn't be good for the economy. But we'll talk about that. I'm just going to get a little bit of water, and then we'll jump right into the video. Also, if you have any questions, don't hesitate to drop them in the comment section below, and I'll be sure to try to answer the best I can throughout the video. Alright, let's get a recorder and get this video started. Quickly, just going to be changing something on my other monitor just so I have a little bit better of a view of what's happening on one of the charts I'm looking at, just to get an idea. Okay, cool. Alright, hey traders, to another global macro update. We're going to be starting off looking at the economic calendar, or the economic data that's coming out for this upcoming week. So in around 45 minutes, we do have the Fed interest rate decisions that are going to be coming in, forecasted to be the same as the previous at 25 basis points or 0.25%. So that'll be impacting the US dollar if it's going to be a different number than what people are forecasting. what we're basically looking at is if it's going to be increasing, if they're going to be increasing interest rates, it's going to be harder for businesses and individuals to get money. It's going to be harder to obtain credit. And that would be not very good for risk on assets, in my personal belief. Whereas if they're going to make it zero, or if they're going to make it less, that's going to try to create more stimulus within the economy. So then markets could act potentially favorably in that certain circumstance. So we'll see how that goes. We also see GDP, which is going to be pretty important on Thursday. And then we have GDP for Canada, and then CPI, which is going to be interesting for the kind of understanding of inflation, not just in the United States, but globally as well. Like we've been talking about, we are looking at inflation through CPI, and we can see not a whole lot. It's actually deflation within Australia, negative 1.9 compared to negative 2 that they were anticipating. But yeah, there's no real sign of inflation yet, in my personal opinion, but that doesn't mean that people are not going to be looking at gold and silver, because they definitely are. Gold basically hit, not an all-time high because it went above 2K, but it hit in the past since 2012, 2011, 2010, we've hit really an all-time high in terms of candle closures, so that's really important on gold. And on silver, we are, in my opinion, just scratching the surface for how much further we could possibly go, because gold and silver are both safe haven assets in terms of monetary uncertainty. If there's a lot of money printing, where do people turn to? Where have people turned in the past? People turned to gold and silver, right? Before there was cryptocurrencies and blockchain, gold and silver were real sound money that people used to store their wealth over generations, whereas fiat currencies do not have that ability. So we can see through currency proliferation, currency money printing basically, we can see that these two precious metals are getting heavy bids. Lots of buy pressure within these two, but silver, I think, is going to appreciate at a greater rate. Also, how's it going, Truck Nubs? Hopefully you're having a good day, and I'm really happy to have you here. So like always, we're going to start off with the S&P, and then we're going to dive into the other asset classes. Just wanted to have a quick discussion on gold and silver. But first things first, we always want to start off with the S&P to get a good understanding of the risk on asset that a lot of people are looking at, and to get a good understanding of the overall sentiment of the global markets. So I'm going to get a little bit of water, and then we're going to jump right into the daily chart of the S&P, and then we're going to go over the smaller time frames, getting granular with our detail, with the 6 hour, 4 hour, maybe 2 hour. We'll get to the smaller ones, but we don't really go anything under 1 hour here. All right, so on the daily chart, I do see a squeeze occurring. Let's get our snip and discuss this a little bit better. Our first anchor point was right here for a resistance, and then we have the second anchor point, and then we have a third anchor point. Something to note, when we went above this zone, we instantly got rejected back down very quickly. So we know that there is sell pressure coming in the market, but we are holding this nice series of higher lows. You got first touch right here. You can also see it was a previous level of support, turned to resistance, turned to support again, and then you see 1, 2, 3, 4. So lots of respected zones on this ascending support zone, as well as this ascending resistance zone. So we're getting a nice squeeze within the structure. We're also getting a contraction in price action. And what we'll actually do is go to the Dow Jones Industrial Average in 1930 to understand what happened, because this somewhat looks like it, where you get a massive move to the downside, you get a huge bounce, and then you get this slow running where you're going up, but there's no real aggression from the buyers. And then once it does inevitably break, it really starts to dump. Now, there is increasing cases of COVID in the United States. They haven't really been doing a whole lot, and I think that the United States has been not the best in terms of how they're handling it, let's just say. So if there is a worry of an increase in a second wave, and there has to be some sort of lockdown that takes place, I think that will negatively impact the market, and it'll kind of give some realization that, no, this isn't going to be a 5-month, 6-month kind of move to the downside, quick recovery, and then it's just a blip when you're looking back. But this is going to be a more long, drawn-out correction, or some recession where a lot of people are thinking that we're completely out of a recession, but that's kind of to the downside. And we'll look at the smaller time frame right here. But first, before we get into that, I think what I actually want to show you is a quick look at the Dow Jones before 1932, 1931, when there was a lot of hope, optimism in the air. So let's go DJI, and let's go all the way to the monthly chart, and then remove drawings. And then when we zoom all the way out, let's go to the log. This was the 1929 Great Depression, start of 1929 right here, went all the way into the 30s. It was an entire decade, and then the Second World War came in to kind of boost the economy to some degree. So let's now look at this. So let's go replay, and let's go to the weekly. And what we're looking for specifically is this bounce right here, because that was the first major sell-off, and this was the hope, recovery, optimism bounce. We see that we had a massive sell-off. This particular bounce is not as aggressive. We saw this one hit just under the 61.8 fib, I believe. So let's get our fibs right here, fib retracement, and then we can see if we're going from top to bottom, just above the 50%, not really hitting the 61.8. So we can see that there's a lot of sell pressure around that range. The SPX did not actually hold that zone. We're above that area by far. So if we're going to the daily chart, we can see we have broken above this zone. So we have to understand that. We have to take that into consideration. We're basically above all important key levels on the fibs. So lot of movement to the upside, but just the main thing I want to look at is the fact that, let's even go to the 2-day, this long drawn out zone. So you get a move to the upside, but then you get this area where you get tight movement to the upside, low volatility. I think that's kind of what we see right now, and this is, in my opinion, a little bit of a squeeze, right, where you get a series of higher highs and higher lows, but the highs are less aggressive than the lows, creating a squeeze where there's going to be an apex within the structure. Kind of like we see right now. Obviously, it's not going to be exactly the same in price action, but we're starting to see this nice tight correction and the consolidation of the price action where it's getting less aggressive, where we had big moves, but then now we're getting this nice tight really move to the upside. So we'll see where it goes, and we'll go into the smaller time frames. I just wanted to discuss what happened in history. So we'll see what happens. So let's get this off there and then go on to a smaller time frame, because not only are we looking for ascending zones to break if we are looking for exposure to the short side, but we also want to see market structure break, which is also going to be horizontal levels. So we're looking for zones of confluence that we can say if it breaks this particular zone, there's going to be some hesitation from the buyers, a lack of confidence from the buyers, there's going to be stop losses hit. And that's a situation where we're going to get aggressive sell pressure coming in, because fear, panic, worry is a lot stronger of an emotion than greed. And people are going to act more irrationally when things are falling than when things are slowly moving up. So the key zones that I'm currently looking at initially was this zone, the $3,200 zone, because we not only see the ascending zone hold there, but also this key horizontal level, and we actually held and made a higher low. So it looks like it could still trend to the upside. So right now we are, yes, in a risk on environment, but if we slowly trend like that, we're getting really close to the apex there. There's going to be a decision that has to be made from the buyers and sellers, because right now there is a little bit of a battle, let's say. So the resistance is keeping the price from making a significant higher high, right? The support is making the price hold a certain level, making higher lows. So there is a squeeze occurring, and if it moves to the upside, you'd be looking for structure right there. You can be looking for a descending triangle, descending wedge, some contraction in the price action that allows you to see the price come closer together, squeeze against this new level of support, as well as a descending zone, and that's where you're going to get these explosive moves that do occur. And you're looking for a possible break in the descending trend line, as well as the market structure recent high, and you're looking for a retest of that zone, and that's going to be your entry point for a possible move to the upside. In terms of a downside, like I said, $3,200 zone is going to be the key level of significance for me in terms of a possible risk-off scenario. We don't see that right now. Overall, we are still making higher highs and higher lows, so the expectation is that we're going to continue until we start to see really, really strong weakness from the bulls, barely able to get it up. We do see a little bit of hesitation right now up against this current high right here, where we see somewhat of a high and then a strong high that was held right here. So we're coming up to a resistance right now where we see a strong level of demand create a higher low. Wouldn't really classify this as an ascending triangle formation, wouldn't trade it, but it does look like there is a strong possibility for the price to continue to slowly trend to the upside, which would indicate that the risk on sentiment is going to continue. Let's go to the 2-hour chart just to see if we're going to miss anything. Does not look like we are seeing anything that we didn't see on a larger time frame. We could extend this out a little bit further, and we could get rid of this if we wanted, just to make it look a little bit more clean, like so. And then we'd just be working with this $3,250 zone and this $3,200 zone. If it's going to consolidate a little bit further, like this, and then actually break this ascending zone and it's just consolidating, we'd be looking for a break, lower high, because this is a high, this is a lower high, and then you're looking for a continuation to the downside. That would be the ideal situation for a possible short play. And then for longs, if you are looking for risk on exposure, you just be looking for a break of this high, making a new high, and then that potential higher low could be that previous resistance turned into a new level of support. And you got a decent amount of range to go if you are looking for that price to continue to the upside, kind of like that. That would be obviously a pretty solid risk reward trade if you are looking to risk around there and take profit around that high there. So there's opportunities on both sides. I think it's just kind of consolidating right now, but as long as the price is able to hold the series of higher lows, that's definitely a risk on situation for me, and I'm going to be playing in the markets as such. Mitchell says, COVID is screwing us and will continue to do so. Yeah, I definitely think that is going to be true. It's just a very different society that the West has compared to places like Japan, China, Singapore, South Korea, where they're more, I would say, obeying to government officials. If they say wear a mask, do this, do that, they're more accepting of the more rigid, structured system that people are trying to implement. Whereas places like Canada, America, definitely are more into the freedom, which I agree with. But during pandemics, I think that there has to be a little bit of understanding that it is a kind of, everyone has to play a part in it. And that might take a little bit of freedom away in a small amount of time. But we'll see where it goes. I agree with you, but it's kind of a worrying thing, definitely, because obviously people die. But yeah, everyone can just do their part and do their best. Basically, that's all you can do. All right, a little bit of discussion on the small caps getting back into the price action. So this is the Russell 2000. We're still holding that previous key level of resistance as a new level of support, which is good to see, but we're not really seeing any aggressiveness or any real push to the upside just yet. This is considered, in my opinion, to be a high base. It's a basing pattern on top of a previous resistance, which is acting as a new level of support. At a high, this is theoretically the higher high that you would be looking for, but we do see that that's going to be the next target for the price in my personal view. So right around there. So you got a decent amount of room to go. And we can also draw in our ascending zone connecting the higher lows, like so. We can step back that a little bit, like so, and then make it green because it is a support zone. And that's going to be the ascending zone that we're going to be using for the Russell 2000. So we're not only wanting to see this hold, but also to see this little resistance break if we are going to be continuing the risk on sentiment. Let's go into a smaller time frame here because we are just consolidating. We did see a little bit of a fake out. On the daily, this is a nice horizontal zone. Not absolutely perfect. If we go like that, that would make it a little bit cleaner because we see wicks to the upside, but we see candle closures with the wick touching the same level. So that would be a nice level base of a horizontal zone. But then let's say, for example, if we're going to the 4 hour, that makes it a lot less ideal. So I'll leave this on here, but we do have to kind of understand that we need larger time frames to close above the zone in order for us to really call it a breakout, because we've seen it happen last time, but it gets sucked right back into below the resistance zone, so we don't really see a breakout happen yet. Can't really draw a descending zone here. Theoretically, I guess you could if you really wanted to, like this, but I'm not really wanting to do that. I'd rather just stick to a large time frame and then see if it's able to get above this particular zone, because if it does, I think there's a high probability that we could see a continuation move to the upside. So let's get our brush, which is right here, kind of to the upside, testing this zone, because we've seen the SPX already hit this zone. We've seen the Nasdaq break this zone. The German DAX already hit this zone back in early June. So a lot of these indexes that are relatively strong have already reached that point. So then if the risk on sentiment is going to continue, if the SPX or S&P 500 is going to still slowly crawl up to the upside, I expect other indexes like the Russell 2000 to crawl up as well. So right now we're just in a consolidation. We don't want to call it a breakout. Very similar to the SPX. The overall trend in sentiment is risk on, meaning that risk on assets such as the S&P, Russell 2000, Nasdaq, global equity indexes are going to move up, as well as BTC and alts. But we do have to be a little bit cautious because it does look like we are slowly running out of steam, where it looks like we were getting these really strong, solid pushes to the upside. And now we're slowly crawling up, just barely able to make and hold that previous resistance as a new level of support. Not really seeing that aggression like we used to. If we do break this zone, obviously that's great to see, but just commentating on what I see right now. All right, now we're going to be discussing the Nasdaq. Obviously, this has been a very relatively strong index within our basket of indexes, and we can see there is a nice demand zone, where the previous level of resistance is now holding as a new level of support. And then we see a nice consolidation, failing to make a higher high, but holding the nice level of support as well. So just in a sideways channel, a base, whatever you want to call it, that's what we're currently in. So when we do dive into a smaller time frame, we can see that we made a lower low, but we actually we're able to hold that zone on a large time frame. But I will draw this descending zone just because on a 4 hour, which is still a decently large time frame, we are closing above or below this zone. And then let's just draw in our projection, and we know that there is a lot of demand here. And what we're also going to be doing is just changing that zone, and then going to be making that, sending it to the back, just so we can get that red line and turn it green. And then we know that there is a lot of demand at the zone. And then we can also see that there is a high, lower high, lower high, potentially creating a squeeze for a descending wedge structure. So let's go on to a smaller time frame and just quickly look at this, see if we get a nice trend line. Definitely we get a nice trend line, so let's make that red. Let's go on to an hour chart for an execution time frame here. This is that all-time high that we hit at 11K for the Nasdaq. So this has been relatively strong in the basket of indexes that we are assessing. And let's get our projection like so. Oh, that was not red. That was orange. That's red. And then what are we looking for? We're also looking for structure to break. So let's get our rectangular zone, and we can see key level of resistance right there. Held many times, moved back down, held again. So that's going to be the zone that we want to see break for the Nasdaq in order to potentially see a move back up to this zone here, because we're seeing a consolidation. This is a sideways channel where we're nearing a demand zone where other indexes look like they're going to continue the risk on move to the upside, or at least carry its slow ascent. So then a relatively strong index like the Nasdaq, I think, does have the potential to break out from the squeeze that we see right here. and trend back towards the upside, where we're going to be seeing that key level of resistance. So that's the current structure that I see in the Nasdaq. It would be really nice to see a break and retest. I might actually look to trade this contract for difference, a CFD on this, because this is a really solid pattern, so I will be looking at this pretty closely. And I'm just going to be drawing that here. BTC is looking like it's taking a little bit of a move to the downside here, where the index, the S&P, is not. Wow, BTC's definitely. So we'll take a look at that in the crypto market update here, but that's the look on the Nasdaq. Not a whole lot of discussion within the volatility index or the VIX. If we are zooming back, we see this $22 zone be a very structural key zone of support. We can see it held there back in June 4th before we had that huge jump to the downside. And then we do see we're contracting in volatility yet again, kind of like we saw right here, where we see a series of lower highs hold the price down. But we are nearing this key level. We can see it was a key level of resistance, now acting as a new level of support. So if this does just fade to the downside, so what do I mean by that? If this does something like this, where it just slowly starts to fade like that, that would definitely mean that the SPX and other risk-on assets are going to be moving to the upside. Nasdaq is probably going to be doing very well, or at least kind of going in that direction that we talked about a little bit earlier. That could be a trade that we could be looking for in the equities or indexes. But that's going to be a big question of the VIX and the overall volatility still contracting and not seeing that expansion yet. If we start to see an expansion and a break of this descending zone, that could indicate that we're going to have a sell-off, and risk-off trades in the short term are more favorable. But right now we don't see it. We don't want to put too much of our bias and project it onto the price action, so we just want to let the price action speak for itself. And right now it's just contracting, and we kind of see an overall trend here where a lot of things are about to look like they're breaking out. So that could mean that a pretty big opportunity is coming in the next little bit here. So we'll see where it goes. Quick look at the world equities here. Not a whole lot to talk about. Like I said, the DAX did break the previous June high. It is retesting the zone of confluence for the key level of demand. So the overall sentiment is still looking strong for the German stock market exchange. Overall, world equities here for VT, very similar to the S&P, where we see a key level of resistance and support creating a squeeze within the structure. We're nearing a pretty strong level of resistance right now at around 79, let's say 80. Key level of resistance and support in the prior price action as well. So if we go like that. So we're nearing a key level of resistance. We'll see if the price is able to break above or hesitate. Right now we're still risk on, but a lot of indexes and price action patterns that we've seen are looking like they could be nearing a potential next big move, and that could be to the upside if it melts to the upside, if the risk on sentiment continues. Don't think that's a high possibility, but I think the higher possibility is going to be a move to the downside, where you're going to be breaking structure, breaking supports, ascending supports, and that could be a pretty quick move, because we do understand that moves to the downside are a lot more aggressive. They have a lot more speed than moves to the upside on average. Sometimes you have aggressive pushes to the upside, but usually sell-offs are going to be a lot more quick to, you got to be a lot more quick to act on shorts compared to longs is the main point I'm trying to get across. So not much more to discuss on the world equities here. We're, I think, going to now jump on to the currencies to have a good understanding of what's happening over there. Not a whole lot to talk about for the Japanese stock market index. We're just consolidating. UK FTSE 100s just consolidating. Not a whole lot to talk about. It's been very weak relative to other indexes, so it makes sense that it's really not able to make any sort of higher high. All right, let's now talk about the US dollar index. It's still falling. It made a lower low from the low that it created in July 27th, so It's still moving to the downside, but we do have to understand that this $93 zone is going to be a pretty significant level. We've broken significant levels before, so the overall direction, momentum, sentiment for the dollar is going to weaken. We do have to understand that there is the FOMC discussions as well as the interest rate decisions in around 18 minutes, so that could impact the dollar. Right now, I'm just going to assume that it's going to continue to weaken. Right now, things are risk on. Like we said, the Nasdaq looks like it's an opportunity for a long or a buy. S&P looks strong. DAX, which is a German equities, looks strong. So overall, risk on assets are looking good. So capital is getting pulled from risk off safe haven currencies like the US dollar, Japanese yen, and getting funneled into risk on. One thing that's a little bit surprising is right now, things like CHF, so Swiss franc, is doing very, very well. Euro is doing very, very well, which are both considered, in my opinion, to be risk-off currencies, which is a little bit surprising. And then you see overall Eurozone do well. So then in the risk-on environment, the risk-on currency in Europe, so we're talking about GBP, the United Kingdom's currency, is doing the best out of the currency basket that I'm currently following. So Eurozone is doing pretty well in terms of the currencies, but GBP is definitely taking the lead. Swiss franc is definitely not far behind. Whereas things like New Zealand, Australian dollar is not doing well. Canadian dollar has just not been doing well for the past while. So we'll see where it goes. It's definitely, in terms of the currencies, turning into a little bit more from a huge risk on into a kind of equilibrium where nothing's doing phenomenally well other than Swiss franc, which is risk off. So we do have to consider that. And we can see that right here. This is what I'm seeing. So this is GBP. We can see GBP against JPY. Every single one of these is considered either up or down against Japanese yen. So GBP is doing the best, and we can see right here, Euro is doing very well, and we see CHF do very, very well as well. So the Eurozone is doing pretty well for currencies, but we can see that the risk on currency in the Eurozone basket that's doing the best is GBP, which is a risk on. So the sentiment that we get from the currencies is that global investors are still speculating on a little bit more risky assets like GBP compared to putting their money in JPY, USD. But we do have to note that Euro and Swiss franc are taking a bid as well. So there's a little bit of worry, but there's not a complete overboard on let's just put as much money on risk on currencies as we can because we are extremely hopeful. We do not see that. So there's a little bit of worry. But overall, sentiment is still looking bullish. So Euro is really taking the lead if we're taking a step back. And look, what is absolutely collapsing is the US dollar against every other currency. You could probably get some really good carry trades where you're making money just by holding it, as well as the appreciating or depreciating, depending on which way you're pairing, against a little bit of a higher interest rate. Like Turkish lira, South African rand, they have a little bit higher of an interest rate, so then you're actually able to make money just by holding the trade or the pair. So let's go back to the DXY because the US dollar is going to be a major currency that we do have to keep an eye on. Let's go to the weekly chart and understand why we think that the $93 zone is a zone of significance. So we can even go back to the monthly chart. Obviously, it's not going to be an exact zone. It's going to be a certain area, but we can see, let's get our brush, key level of demand. Lots of wicks to the downside. We see candle closure, wick to the downside, wicks right here. So we see lots of demand coming in at around the $93, $94 range. So we initially did not see this zone right here hold. This was the $94 range, new level of resistance, new level of support. That just blew right through it, and we're seeing the price now hold potentially this zone where we see lots of wicks, 2 wick, 3 wick, 4 wick, 5 wick, candle closure right here, another wick. So lots of buy pressure at around the $93 zone. If we go back even further, don't really want to use anything from like the 90s, but we can see that's a key zone that we're currently potentially going to be holding, but the overall momentum, trend, direction, and sentiment is going to be moving to the downside. And then the next zone I'm looking at is around 92. That's why I have this zone right here labeled. And then if we go beyond that, we could be looking for further zones. This could be a zone right here, 90. And then also, let's get a copy and paste of this zone. Oh, I guess I did. Maybe not. It's on that zone right there. That's going to be the next zone. So we do see a couple zones that we could be looking at, but overall sentiment is definitely going to be to the downside. So we're going to be looking for USD weakness to further continue. And we can see a nice little ascending zone that broke right here. Made a lower low from this low. We could be retesting that low for a new level of support. We already tested it on a smaller time frame, so let's go on a 1 hour. Not absolutely perfect. That's a huge wick right there. And then now we tested it with this 4-hour candle. So if we're going on 2 hour, that candle right there. 1 hour, that candle right there. So this is that candle that retested the zone that I'm looking at. So in my opinion, USD is going to further move to the downside unless there's going to be some huge shock in the interest rate decisions in around 12 minutes. So we'll actually keep an eye on the US dollar as well as the DXY when that actually occurs, if the time allows us, because we do have to go into gold and silver as well. So overall momentum is going to continue to the downside for the US dollar, in my opinion, unless something happens, but we'll see. All right, now look at gold and silver. Just going to quickly look at the comments to see if we have anything. All right, so let's go on to gold and silver ratio first, because that's going to give us some good information. So we were looking to see if around the 82-81 zone was going to hold. I'd say a little bit more in the 81 would be a better choice. Kind of looking at it now. So we'll see where it holds. I'd ideally like to see a little bit more consolidation, to be completely honest, in this, because we've been on an absolute run. Most markets need to take a breath after such a solid run, and we can see both are potentially creating a lower high. Gold's looking a little bit more solid than silver, where we got a really solid rejection, but it'd be nice if we see a little bit of a consolidation, kind of like we got right here. This set up an awesome move, and we just got to our next key level of support. So for key zones in terms of the gold and silver ratio, we see a nice level of previous support, which is this green ascending zone that could be turning into a new level of resistance. So we'll just put a major zone right here. We don't exactly know where it's going to go, but that could be the zone that we could bounce in, kind of like we did right here, where we got to move down, we got to bounce, and then we continue the trend to the downside. We got to move down, bounce, and then a continued trend to the downside. That could be the situation that we could be seeing, which would mean that we're going to have a little bit of a cool down in gold and silver, which is totally all right, because we know for a fact that we're going to be looking for continuation patterns for these precious metals. So not a whole lot more to discuss. Massive move, but I'd like to see this move up a little bit. That would mean that silver is going to depreciate faster than gold. It's going to be moving faster to the downside, but then when it does actually crack to the upside again and break out and start to expand in volatility, we're going to be at a higher point in the gold and silver ratio, which means that if we do fall, silver is going to be appreciating at a greater rate than gold. So now that we have a quick understanding of gold and silver ratio, let's take a quick look at gold on the 2-day. Let's even go to the weekly. So there is that previous resistance right there, which we're going to be looking for a possible new level of support. Don't think we're going to be going to 18, somewhere around there, but we'll just keep that in mind. Now to the daily chart, we see a huge retest at that zone. So that's going to be the major zone that we want to see the price hold if we are looking to see gold continue. Is 1920 to 1910. So we can see right here we are creating another level of resistance right there. We do see higher lows, but not really precise. I'd like to see, if we're looking for an ascending zone, we see a low, higher low, and then a higher low. And then you can draw a nice ascending zone somewhere like that. That would be an opportunity. Right now, I just think it's too ascending. It's not really holding a nice structural ascending zone. So at this point, I'm just looking to see what kind of structure that it's going to give me. We could be looking for descending zones as well as possibly a descending zone like that. You could be looking for an ascending zone if it's going to create a substantial higher low. Like I said, that's going to be a little bit too aggressive, but something like that might be a little bit better. But basically, you're looking for continuation patterns. I don't really see a continuation pattern right here that I'm able to clearly identify unless we're really zooming in. And then you can just potentially draw in that zone. But I'd like to see something a little bit more clear on the 4 hour, to be completely honest. That could be an opportunity. Not really a nice clear ascending zone, but you do see higher lows squeezing the price against a key level of resistance, so you could definitely classify that as a potential level. And then this is going to be the next target that you want to pass right there, and once you see the price pass that zone, then you can see a further upside movement to the upside, so something like this. We get a big move up, consolidation back into the range, but still then holding above this previous resistance as a new level of support. And then once it breaks out of that range, that could be an opportunity for further continuation to the upside. But when we do zoom back, it's not as ideal. Like I said, I like to see a little bit larger of a pattern. Maybe something like this. Up here, and you could draw in your nice ascending zone there. So I'll leave that there on the 1 hour, but like I said, I'd like to see something. It's nice because you have these two distinct highs and lows. You have this very strong high right here and this very distinct low. So it's giving you either a funnel. This is not supposed to be upside, it's supposed to be straight. It's giving you at least a channel or a funnel. So it's nice to see that. It's not great when you see for continuation stuff kind of like this because they're not really able to get, unless you're just looking for zones to break, that could be an opportunity. But in terms of structure, you'd like to see a distinct high, a distinct low, and then you're able to squeeze from those two areas. All right, so that's going to be gold and silver, or that's going to be gold. Let's look at silver. Go to the weekly chart, even the monthly, honestly. Let's just see where we are. So we got to remind ourselves, gold's at the all-time high on that chart. Look at where silver is. It barely broke out of its consolidation, and this is the consolidation I see. So we can even go to, let's say, 3 month. Just so we know where the consolidation is. This is the consolidation that it just broke out of, right? So what we're looking for is for a catch up on silver. Look at where the silver high is. 49 bucks, right? And we're at 25, 24. So we still basically got a double here, almost. But that's the first thing that we should really understand, that silver has a lot more room compared to gold. So we're looking for continuation on silver more so than gold. Nice move to the upside. I'm just looking for a zone that could be a possible key area. So definitely the 2135-ish zone. That's going to be a really big area. Looking at the next two highs right there. And then obviously this key zone right here. I'm going to be drawing actually two zones. I'll leave this one here actually. So we got our nice areas. I think should have actually put two zones there. All right. So we know that there's a major level of demand. Don't know if we're going to come back here. I really don't think so, but we'll just leave that there. And we know that there's a major level of resistance right around here. And we're just right smack dab in the middle of it. So let's now go into a smaller time frame. Like I said, significant high, significant low. It is good to see for a potential move like this. So you get a major swing high, major swing low, and then you just draw an ascending and descending zone. We see a major swing high and a major swing low. we don't really see anything, but I'd like to see something like this. So we could be waiting for a little while. We just had a massive move, but in short, that would be a potential play that would be coming up a little bit later. But I currently definitely do not see anything that's worth trading on silver right now. We just had a massive move to the upside here, so we do not want to overtrade. We want to be patient. That was a really good opportunity. Unfortunately, could not play that one. I was asleep, but a stop entry above the high there would have been a phenomenal opportunity to catch this. But caught from 18. Let's look at 18. Where is it? Right around there. 18, somewhere there. So that was a really good entry, but couldn't catch this whole move here. But that's how it goes. So when we are looking at the metals market right now, I would say, in short, we need to wait for a better structure to form before we can actually start to enter the market again. Oil has not done a whole lot. WTI, Western Texas Intermediate, crude oil, really, in my opinion, kind of has been only appreciating because the thing that we're comparing it to, the US dollar, is depreciating so quickly. So if oil did absolutely nothing, it'd still go up in price when you're comparing it to the US dollar, which is, in my opinion, what we're seeing right now. So it's a nice squeeze. It's a nice ascending zone, kind of similar to some of the indexes kind of that we're looking at with the ascending zone. But right now, there's not a whole lot to talk about within the oil market because we're just really consolidating in a nice tight range. So that's a global macro update. We will do a crypto market update here in a little bit, but I want to finish this off here. I'm trying to make them a little bit shorter. If we do a crypto market now, it'll be like an hour and a half, maybe 2 hour long video, which less people are going to be watching. So I'm trying to keep it under half an hour to 40 minutes, and it's 46. So I'll cut it off there. If anyone has any questions, don't hesitate to put them in the comment section below. And if you found this useful, informational, educational, it would be great if you would like the video and subscribe for more videos like this. So thank you very much for watching. Really appreciate it. Hopefully you got some value out of this. And until next time, have a good one, folks.